Ladies and gentlemen, good day and welcome to V2 Retail Limited Q2 and H1 FY22 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Akash Agarwal. Thank you, and over to you, sir.
Good afternoon, everyone. A very warm welcome to our Quarter 2 earnings conference call. I hope you all are staying safe and healthy through this unusual and challenging time. Along with me, I have Mr. Manshu Tandon, our CEO, and our investor relations team. I hope everyone has had an opportunity to look at our results. The presentation and press releases have been uploaded on the stock exchange and on our company's website. Let me start with the key updates. The company opened 3 new stores during the second quarter. The company has opened 1 new store during the third quarter, which is the ongoing quarter. As on September 30th, 2021, the company operates 96 stores spread across 15 states and 84 cities, with a total area of 10.1 lakh square feet. The same store sales growth for quarter 2 stood at 59%. We continue to remain focused and committed to the accelerated store expansion strategy despite delays in the first half of FY22 due to lockdown. So we are looking to open another 5 to 6 stores till the end of this financial year. At V2, with our strong customer connect, we have witnessed strong rebound in the demand post relaxation of restrictions in quarter 2. The recovery has been much sharper with the onset of festive season starting in quarter 3. Now allow me to give you an overview of our operational performance during the quarter. First, I will talk about the consolidated performance for the second quarter. The revenue from operations stood at 149.5 crores, registering a growth of 76% year-on-year basis. Gross margin stood at 34.3% compared to 32.6% last year. The stores were operational on an average for 86% days compared to 45% days last year. Compared to 45% for quarter 1 FY22. EBITDA for the quarter stood at 19.5 crores as compared to 9.7 crores in quarter 2 last year. EBITDA margin stood at 13.4% compared to 11.4% last year. Now I will talk about the standalone performance for the second quarter FY22. Revenue from operations stood at 149.5 crores, registering a growth of 76% from last year. Gross margin stood at 30.8% compared to 31.8% last year. EBITDA for the quarter stood at 16.5 crores as compared to 9.5 crores in quarter 2 of FY21. EBITDA margin stood at 11.1% this year in quarter 2 as compared to 11.2% for the corresponding period last year. Now the consolidated performance highlights for the first half of the year. Revenue from operations for the first half of FY22 stood at 232 crores, registering a growth of 90% from the first half of FY21. Gross margin stood at 33.7% compared to 32% for the first half compared to last year. EBITDA for the first half stood at 29.5 crores compared to 17.1 crores in the first half last year, registering a growth of 73%. EBITDA margin stood at 12.7% for the first half of this year. The profit after tax loss for first half FY22 stood at 15.4 crores as compared to a loss of 16.2 crores in the first half FY21. Now the standalone performance for the first half of the year. Revenue from operations stood at 232 crores, registering a growth of 90% compared to last year. Gross margin stood at 31.1% for the first 6 months as compared to 31.1% for the corresponding period last year. EBITDA for the first half of the year stood at 27 crores compared to 17 crores, with registering a growth of 63%. And EBITDA margin stood at 11.7% for the first 6 months of this year. The quarter began with gradual recovery from COVID-19 second wave, with relaxed mobility restrictions and aggressive vaccination drive across the nation, sharply changing the consumer sentiment. Retail channel operations saw rapid growth in demand as the national infection caseload came down. This led to a strong recovery in demand, with sales moving swiftly close to pre-pandemic levels in August and September. All the stores are now fully operational, with overall store operation days at 86% for the quarter. Customers continue to increasingly leverage the convenience of our digital platform with the online channel. As we speak today, our festive sales have been extremely reassuring, and we are having a very positive outlook for our Q3 results onward. Now I leave the floor open for questions.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Anyone who wishes to ask questions, please press star, then 1. Participants who would like to ask questions, please press star, then 1. The first question is from the line of Priyanka Trivedi from Antique Stock Broking. Please go ahead.
Yeah, thank you for the opportunity. My first question would be on what would be your CapEx guidance for the year?
Ma'am, your voice is not audible. Your voice is cracking.
Can you hear me now?
Still not good. Can't understand you.
Hello. Now can you hear me?
Yeah, it's better.
Yeah. So what would be your CapEx guidance for the year?
So we are planning to open another 5 to 6 stores. So I think for that we need about 7 to 8 crores CapEx.
Okay. And my second question would be on your outlook on margins and future sales in terms of, the GST. There's a proposed GST hike of from 5% to 12% from January onwards, and additionally there has been a hike in the raw material prices of cotton and yarn. So how do you see the margins going ahead, and how much % of our inventory would be in the sub-1,000 range?
Yeah, so the rise in the cost price of the raw materials is across the industry, across all the players. So I think instead of absorbing it in our gross margin, what essentially will happen is that the price would go up. So I think for the end consumer, they will have to end up paying maybe a marginally extra cost for the tax hike, as well as the rise in cost of the raw material. So going forward, right now our manufacturing unit sales contributes about 20% of our business, and we are looking to increase it up to almost 50% for the next year. So I think with that in mind, we are targeting a gross margin of around 34 to 35% for FY23, even with the cost pressures.
Okay. Got it. Okay. That's it from my side. If anything else, I'll come back in the queue. Thank you.
Thanks.
Thank you. Participants who would like to ask questions, please press star, then 1. Anyone who wishes to ask questions, please press star, then 1. The next question is from the line of Amit Porwal from Marathon Capital. Please go ahead.
Hi Akash. First of all, congratulations on good set of numbers in a decent recovery. My question is on the number of stores addition planned for 23 and 24. Do we still maintain the guidance of around 15-20% increase every year?
Yeah, so for the next 3 years, what we are forecasting is about 25% sales growth every year, and out of that 20% will come from new store addition, and we're targeting a 5% of same store sales growth. So going forward, so we have about 10.2 lakh square feet operational right now. So by the end of the year, it should be around 10.5, 10.6 lakh square feet. So we will add another 20%. So that'll be about 2 lakh square feet new. So we should be around 15 to 20 stores.
Okay. Thank you.
Thank you. Participants who would like to ask questions, please press star, then 1. The next question is from the line of Vinod Gandhi from Vinod Gandhi Investments. Please go ahead.
Hello. Hi. What is the approx sales target for quarter 3 in financial year 21-22?
So I won't be able to comment on the sales figures that we expect, but it should be the second half of this year should be very similar to the second half of last year.
But in terms of this quarter, I would say in terms of the weddings and everything, and most of the country opening up, will it be a higher target than the previous year?
So internal targets are definitely higher, and till now we are seeing a good demand, and we have a very positive outlook. But it's very hard to predict what happens going forward.
All right. Thank you.
Thanks.
Thank you. To ask a question, please press star, then 1. The next question is from the line of Ankit Babel from Shubhkam. Please go ahead.
Yeah. Hi, Akash. Good afternoon. Akash, I have a few questions. First of all, can you throw some more light on your targeted gross margins of around 35% in FY23? I mean, what would lead to these margins and any risk to these margins in the coming year?
Yeah. So as I said, currently 20% of our sales is the contribution for our manufacturing unit sales is only 20%. And every month we are increasing the manufacturing capacity. And so going forward, I think next year the manufacturing unit should contribute at least 40% to the total sales. And in those goods, in those 40%, we will have an extra margin of about 7 to 8%. So that contributes, that will help us increase the gross margin from 31, 32 right now to 34, 35 next year. That will be the major contributor.
So you would like to retain those extra margins, or you would like to pass it on to the customer?
So we are getting a benefit, like if we compare the price of cost of manufacturing to the procurement cost that we get from vendors, the total benefit is about 15%, because that's the kind of margin that our vendors keep. So out of which we will pass on maybe 7% to the consumer, and the rest 8% will be absorbed into our gross margin.
Okay. Then my second question is that what kind of sales per square feet you are targeting in the coming 2 quarters and next year? What are your targets?
So for FY23, we are targeting a sales per square feet of 725 rupees per square feet per month.
On an average. Okay.
Yes.
Okay. And approximately cost per square feet would range to what levels?
The cost per square feet would range from 165 to 170 rupees per square feet.
Okay. And my another question is that you have a debt of around 50 crores on the balance sheet. Usually your balance sheets are debt-free historically. So can you just throw some light on where do you see your debt at the end of this year, next year, or whatever, time period you are comfortable with?
Yeah, so we have a credit limit of about 50 crores, and by the end of this year, I think we will be able to reduce the limit used by around 20-25 crores. And by the end of next year, we will again be debt-free. Because we didn't want to delay the payments done to our vendors, so we paid most of our vendors even during COVID time. So we had to use the credit limit.
Okay. And this 725 rupees PSF, what you are targeting, I mean, can you again throw some light on, do you see that, the ongoing demand tailwinds to take this, PSF to those levels, or something internally also you people are doing to push it towards that level?
So, like I said, in the third quarter also, looking at October and the ongoing November, I think we are very close to pre-COVID levels, and going forward, we are expecting numbers to be better than pre-COVID. So I think pre-COVID, the last financial year, our PSF for the open stores that we have right now was around 700. So we are only taking, a of 4% growth on that. And we are expecting the new stores to at least have the same PSF as the company average. So that is the ideology behind predicting a 725 rupees per square feet sales for next year. And talking about the steps that we are taking, like the biggest contribution, like I always said, was product. And if we increase the product contribution that are designed in-house from 20 to 40, so I think that should be the biggest differentiator, because in that the customer is getting a much superior product as well as at a better price than most of our competitors, because we are able to manufacture it ourselves and save on the cost.
Okay, and my last question is on the inventory days. Now I understand that FY22 we have a lockdown impact in the first quarter, and it won't be good to see the inventory number of days terms. But what are your ultimate targets to bring the inventory days to, say, by in FY23?
Yeah, so going forward, the inventory days should hover between anywhere between 90 to 100 days, and it should be around 2100 to 2200 rupees per square feet. So if we have 10.1 lakh square feet, the inventory, the ideal inventory days, the inventory value should be around 225 to 230 crores. So we are
currently it is 300 crore.
Yeah, so we will be able to rationalize it in the next 6 months, because what happened was we had to carry inventory due to the second wave, and we had to stock for the festive and the winter season, because we couldn't use that summer inventory for the festive season. So now going forward, like I think the next 6 months will be rationalized. Even in Q3 it will be rationalized a lot, which you will see after the Q3.
No, but again you have new stores opening plans which would be there in, say, in the month of March or April. So when you say around 2100 rupees, so I understand it's difficult to take a call as on a particular point of day like 31st March, but basically, like, if you end the year at around 10.6 lakh square feet, so ideally your inventory should be in the range of 220 to 230 crores. So is it the right number which we should look at in the say by the end of this year?
I'm not talking about consolidated inventory. I'm talking about standalone. So the V2S inventory will be added to this inventory.
And what would be that additional inventory in V2S?
That should be about 30 crores.
So basically 250 crores is what you are targeting in the number at,
including subsidiary.
Okay. So a 50 crore reduction in inventory plus whatever cash flows which would be there, why you still feel that you won't be debt free by the end of this year?
Because we're planning to open 25 stores next year, and we want to open bulk of those stores in the month of March, April, May, so that we get most of the festive sales.
Okay, that's it. I'll come back if I have more queries. Thanks.
Thank you. Participants who would like to ask questions, please press star, then 1. The next question is from the line of Anish Jobalia from Banyan Capital Advisors. Please go ahead.
Yeah, hi Akash and the team. Congratulations for a good comeback quarter in the light of the receding impact of COVID. So I have the following questions. One is before the second wave happened, we were targeting close to 1,000 crore sales and 9 to 10% pre-Ind AS EBITDA. But then this target has got postponed. So now with our strategy of also further increasing the gross margins, can you share what kind of targets do you have for FY23? Can we do better than that, what we were earlier envisaging?
Yeah, so, because of COVID, what has essentially happened is that the target has moved from FY22 to FY23. Because in FY22 also we were expecting our manufacturing contribution to increase, but due to COVID, we didn't accelerate that process. So I think for FY23, our guidance is the same. We should do anywhere between 1,000 to 1,100 crores of turnover with an EBITDA, pre-Ind AS EBITDA margin of 9 to 10%. So we are targeting 100 crore EBITDA for next year, pre-Ind AS.
So, sir, but when we were speaking earlier, our gross margin targets used to be 31 or 32%. But now we are speaking of 34, 35. So wouldn't we be expecting higher margins, or is there something that I'm missing? That's my follow-up question on this.
Excuse me, this is the operator. Participants, the line for the management has dropped. We request you to please stay connected while we discuss the management. Ladies and gentlemen, thank you for patiently waiting. The line is reconnected, so you may go ahead.
Thanks for the opportunity again. So my question, Akash, is that when we were guiding for 9 to 10% earlier, so that time our, I think, gross margin targets were close to 31, 32%. Now with the increased target in around gross margins, wouldn't we be able to do better margins, say, in the next year, or is there something that's not adding up?
Yes, you're correct, because our earlier guidance, the per square feet sales that we were forecasting was around 750 to 775 rupees per square feet.
Okay.
So we've got that guidance down to 725 to tell our investors, but our internal targets are higher than those. So your question is correct, because earlier the gross margin projections were around 32%, but the sales per square feet projection was 750 to 770 rupees per square feet. But now we made a sales per square feet target of 725 rupees per square feet. That gives us a sale of about 1,050 crores for next year.
Okay. So, and second question is in terms of getting our revenues from our own manufacturing subsidiary. So this products would be kind of like a private label product, right? So in terms of the acceptability by the customers, are there any challenges, or can you speak a bit about the response that you have already seen, whether it's like kind of surprising on the positive side, and that's why you are looking to increase the products from your own manufacturing subsidiary?
Yeah, so looking at the data, what we have seen essentially is almost 75% of products that we are making has a better sell-through than the products in the same range from our vendors. So it has been a very positive, result. That is why we're looking to increase the percentage of this, because all these products are exclusive products. Because we also get private labels from our vendors, but those are not exclusive designs that are exclusive to our stores. But now what we're manufacturing ourselves are designs that are exclusive to our stores. So I think that has really helped us in connecting more with our customers, and that is why we're looking to increase it even further, gradually.
Okay, that's fantastic. And if I can just ask one more, so in terms of our consumer sentiments, I believe like our stores are more, around the tier 3, tier 4 towns, where the impact of the COVID has been, I think, higher than the other tier 1, tier 2. So how is this translating to our our business, let's say, versus competition, which has got more number of stores in the the tier 1 towns? So, in general, can you speak a bit about the recovery for us from the consumer sentiment perspective? Thank you.
Yeah, so I would disagree on one point there. I think that tier 3, tier 4 were the least affected. I think, the main metropolitan cities were more affected. Like if you go to smaller towns, I think it's been 1 year since people forgot about COVID in most of the, cities that we operate in. So I feel the recovery for us will be much quicker than, players prominently who have stores in tier 1, tier 2. And we've already seen that happening. And like even in August and July and August was almost 90% of pre-COVID levels, and we're seeing almost the pre-COVID levels for October and November. So this is very promising, and I think people have started stepping out of their homes more. They've been tired of being at home for the last 2 years and having lockdown. So that's the worldwide trend, and I think we have a very positive outlook because the number of weddings is also, I think, a record number of weddings in the next 30 days and going forward in the summer. And I think this trend should continue, and the sales will be better than pre-COVID levels.
Okay, fantastic. I wish you all the very best for the subsequent quarter.
Thank you.
Thank you. Participants, to ask a question, please press star, then 1. The next question is from the line of Amit Porwal from Marathon Capital. Please go ahead.
Hi, Akash. One question is on the our stores are mostly located in north and east. So are we planning, like one of our competitors have acquired certain stores in the south part of the country? So are we looking to, broad base our stores in south and west? That is question 1.
Yeah, so I think for the next 3 to 4 years, that the number of stores, new stores that we're targeting, we can easily open them in the existing clusters that we operate in, because we opened a few stores in the south and we realized that the assortment is very different there. So we don't have that bandwidth in our sourcing team where we can source from 3 different regions because the whole assortment changes. So I feel for the next 3 to 4 years, we want to focus in the existing clusters that we're very strong in, which is Bihar, Odisha, Jharkhand, the Northeast. So I think we have enough potential and enough districts that we haven't covered yet to actually, cover the number of stores target, new stores target for the next 3-4 years. But after that, once we feel we have saturated the existing market, then we will look towards the south and the west.
Okay. Next question is on the warehouse capacity. So how much stores can the current warehouse address?
Yeah, so we just moved into this new warehouse, I think, last year, and we have planned the capacity till FY24. So it can easily service us till a turnover of, I think, 1,700 crores.
Okay. Thank you. The next question was on the rent. Now with COVID stabilizing or, it's a little behind us, do we, and the real estate seeing a pop, do we see the rental for our new stores going up?
I think it should stay at the similar level that we have right now, which is, I think, 44 rupees per square feet. So I think the average would be the same for new stores.
Okay. And the last question, what would be the capex for FY23, absolute number, assuming that we are opening around 20 stores?
So the number would be around 25 crores.
Okay. Thank you. I'll join back the queue if I have more questions.
Thank you. Participants, to ask a question, please press star, then 1. The next question is from the line of Ankit Babel from Shubhkam Ventures. Please go ahead.
Akash, a couple of more questions. First is, what was your e-commerce sales in Q2, and what are you expecting it to be in the full year of FY22 and 23?
Yeah, so for Q2, the e-commerce sales was 4 crores, around 4 crores, and for the first half of the year, it was around 16 crores, and we are looking to close the year with around, I think, 24 crores of e-commerce sales.
So why is it declining sequentially?
Because we are changing the technology partner. So we are implementing omni-channel. So we are not doing delivery from stores as of now. So we are doing that implementation. So that is why we've reduced the ad spend. And we want to first, take that system live, and then we will accelerate on this e-commerce sales again.
So how much time will it take?
I think it should take another 45 days.
Okay, so by the end of this quarter, you'll be up with a new technology partner.
Yes.
So next year, what are your targets then in e-commerce?
Next year, our target is anywhere between 5 to 10% of sales. It all depends on the traction. So you can say 50 to 100 crores of sales, but we don't want to burn cash. So it all depends what is the marketing ROAS and what is the kind of return and how our ads are doing and what is the organic traffic. So it will depend on the business performance.
So, yeah, actually my next question was that only, that if you achieve say 50-70 crores of sales, will you make money? Will you lose money? Cash, non-cash? How the profitability would be?
I think you can say the EBITDA would be maybe minus 1-2%. That's it. For the e-commerce business.
Okay. And this sales would be in addition to what you have guided of 1,050 crores offline sales?
Yes.
Okay. And you also mentioned that for next 3 to 4 years, you'll focus on the existing clusters only, as you see a huge potential here. So can you throw some light on the store potential in the next 3 to 4 years in these clusters for V2?
So we have already identified about 90 locations that we are not present in the existing clusters, and 90 different districts where we can open stores. And there are some districts in those 90 where we can have 3, 4, 5 stores also. So if you look at the next 4 years, we want to open, around 120 stores, and which can be easily covered by the already identified locations in these existing clusters.
Okay. Okay. Yeah, that's it from my side. Thank you.
Thank you.
Thank you. Participants, to ask a question, please press star, then 1. The next question is from the line of Amit Potwal from Marathon Capital. Please go ahead. Mr. Potwal, please unmute the line from your side and proceed.
Sorry. So, Akash, you are guiding for a substantial rise in revenue and as well as stores in coming years. So my question is on the bandwidth. Are we looking at adding up in the team? What's the plan there?
Yeah, so, the management team and the core committee that we have in our company, their biggest priority right now is, getting the right manpower. So we just hired a new HR head, and we've already, given the LOR to our new CFO, and our retail operations head has joined from Easy Day, and marketing head is also about to join in the next 15 days. So I think a lot of focus is given on recruitment and getting the right people, because ultimately they are the ones who would take the company to the next level. And me included and the whole management team, we're focusing a lot on recruitment and getting the right management personnel, experienced people.
Yeah, all the best, and I wish we will be reaching those projected levels. Thank you.
Yeah, thanks.
Thank you. Participants, to ask a question, please press star, then 1. Anyone who wishes to ask questions, please press star, then 1. As there are no further questions from the participants, I would now like to hand the conference over to Mr. Akash Agarwal for closing comments.
Thank you everyone for joining the call. We hope we have been able to answer your query. Stay safe. For any further information, we request you to get in touch with Marathon Capital, our investor relations advisor. Thank you and have a nice day.
Thank you. Ladies and gentlemen, on behalf of V2 Retail Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.